But let's try and connect with our experts. What's their outlook on the Indian markets in the upcoming week? And onto the technical front, we have Rajesh Palviya joining with us from Axis Securities, as well as we have Ajay Bagga on the show. Very good afternoon, gentlemen, and thank you so much for joining us today on ET Now. Rajesh, I'm coming to you first because the wait is just getting longer for Nifty 50. So next week is going to be a monthly options expiry as well. And can we see Nifty 50 touching its all-time high level? We were just having this discussion a while back. So next week, can we see that number coming in on that particular index? What's your expectation?
So throughout the week, Nifty was flirting to all-time high level and just missed by 1 point, but Sensex managed to hit all-time high. So now we are moving to a crucial week now, as we have June series expiry. It's a truncated week. A lot of most of the sectors have done well. The underperforming sectors also participated in last couple of weeks. Throughout the series, we have seen market breadth has improved, delivery volumes have improved. So clearly indicates that there is a buying interest, confidence is coming back to the street, though market is trading almost near to all-time high trajectory, but the kind of activity we are seeing on the mid cap, small cap, as well as on the delivery side, the volumes, it clearly indicates yes, possibly some consolidation we can see for some couple of trading session ahead of this monthly expiry. Nifty may remain in range of 18,600 on the downside, and on the higher side 18,800, 850. But yes, post expiry there is a high possibility that once we complete this rollover activity for June series, then possibly Nifty can continue further more upside momentum, and then we can expect a new all-time high for Nifty, and then this rally can extend to 19,000, even 19,200 level also, as most of the put writers are creating their positions at around 18,600, 18,500 zone, which clearly indicates that base is shifting higher, and Bank Nifty is also holding the ground, and comfortably Bank Nifty is holding its put base at 44,300, 200, 43,200, 300 zone, which clearly indicates that Bank Nifty is also holding up its ground at higher level. Once Bank Nifty manages to cross above 43,800, then we may expect a short covering action in Bank Nifty, and then Bank Nifty can scale up to level of 44,200 to 300. So overall setup is still on the bullish side. Buy on dip should be your strategy, and we believe that this bullish momentum is likely to continue further in the coming week also.
Right. Let me switch it over to Ajay actually. Ajay, talk to us about how block deals are really playing out. Large chunk of block deals coming through now. With the IPOs coming through, do you think that block deals will start to take a backseat?
No, Harsh, actually when smart money starts selling out, you get a little worried that is the market getting very toppish then, because clearly where are the investment opportunities? The investment opportunities are very much in India. Globally, if you look at the smart money has been investing in India over the last few years. So seeing these kind of huge block deals and with private equity players booking profits, you really wonder. And if you see the new fundraising, some of the very aggressive players have not been able to raise money as they desired, though some of the bigger players have been able to raise good money for Asia, but a couple of failures also happened. So I am a little worried, and I would like to see the comments coming from these players on where this money is being allocated. IPOs, we've had a very good mid-tier IPO recently. The stock has done well, and that has boosted sentiments somewhat. So IPOs are fair game, and IPOs are welcome. We have seen good response coming in the few IPOs that are coming, though SEBI has been slow recently in giving fresh approvals. We have not seen very many big approvals coming through. Overall, I would be worried when smart money starts selling out. That's a contrary signal for the markets.
Okay, so that's a contrary signal for the markets, but the global markets and the global central banks, Ajay, are signaling that going ahead, there could be more price hikes, and even the Fed continues its hawkish stance. We are seeing that impacting the global sentiment as well. There has been no substantial recovery of late, or rather gains in the global markets, as well as if you look at the commodity prices, they are also reacting to a slower economic demand outlook as well. So, are you also not positive onto the global scenario? Are you also not expecting any sort of a recovery? And as per you, what concerns are still there for the global markets?
That's a central question, Srishti. If we had answers to that, I think we would have mastered the markets. There are very few people alive who have really traded the 70s inflation. Howard Marks is one of them. And that's why I latch on to every word of his. Warren Buffett, of course, but Warren Buffett doesn't help traders or short-term investors in making a view. In fact, he says, I disregard economists. So Howard Marks is somebody you should follow because he has seen the 70s inflation. Now, looking there, the inflation went as high as 13 and a half. Arthur Burns was a failure as a Fed chairman until Volcker came around and he gave the Volcker shock, taking the rates up to 20%, something like what Turkey did yesterday on Thursday, where they doubled their overnight rates to 15% in trying to cool down an inflation shock. So all the present central bankers want to be known as Volckers, not as Arthur Burns, and that's what's holding the markets back. I would have thought that we have reached peak terminal rate, but the central bankers are going on shouting from the ramparts that you're taking us too complacently and inflation is persistent. We will have to raise rates and hold for longer. The markets are not believing them. You look at the OIS curves, in the US, 5.25 is the terminal rate. So we are very much there. One more rate hike in July or in September, and we are. But I really don't know. The UK rates, the OIS curves are showing 6% as the terminal rate. So still some way to go, and they have messed up on the inflation control. Core inflation came in at 7.1%, which was a 1992 to now highest level. So persistent inflation, scared central bankers trying to scare the markets, not a good recipe, Srishti. That's what we are facing. And unfortunately, India is collateral damage in that, even though we have a fantastic central banker who brought the inflation in control. Our issue is El Nino. Let's see how the El Nino plays out. But otherwise, we are in a sweet spot, but we are collateral damage in the global macro.
Right, collateral damage in the global macro. Let's quickly move on into specific counters. Rajesh, let me move to you. HDFC Twins, they made a very strong move this week. They've in fact carried markets in a week when the markets have shown significant weakness otherwise. How do you see that play out next week?
Yeah, so both stock have done well, especially in this week. So looking at the near-term, short-term setup, HDFC Limited manages to give breakout of its last 4-week consolidation breakout. So looking at the setup, looking at the addition, we believe that HDFC Limited can continue furthermore upside, and we can expect target of 2780, 2800 in the continuation of this pullback. So HDFC Limited is a buy with stop loss of 2680. HDFC Bank is also showing strength, and looking at the setup, we expect that if stock continues to hold above 1615 level, 1615 is the important level. If it's hold those level, then possibly HDFC Bank can also continue upward momentum towards 1680 to 1690. So both stocks are showing strength in this week, and we believe that this momentum can continue for next week also.
Okay, so that's the Rajesh takes on HDFC Twins. But with this, viewers, it's time to slip into a short break. But don't go anywhere. We'll be right back to take this discussion forward with our experts onto the show. Stay tuned for more.
Right, welcome back. You're watching Your Trades on ET. Now, let me quickly take it to our guests, both of whom are with us. Sorry for that. Rajesh, let me take it straight back to you. Talk to us about the top picks for next week.
Credit Axis Grameen stock has given a breakout on a daily weekly time frame, and the kind of breakout and volume action during the week is clearly indicating that this stock can continue further more upside momentum in the coming week. 1450 is the target which we are projecting. Keep stop loss of 1350. Another stock is from pharma space. Most of the pharma stocks have shown good buying interest in the current week, and looking at the setup for Aurobindo Pharma, we expect that the kind of breakout and the open interest addition which we have witnessed during the week, we expect that bullishness is going to continue further in the Aurobindo Pharma, and possibly upside target in near term could be 730 to 740. So Aurobindo Pharma is buy with stop loss of 680. And the third stock is United Sprit McDowell. Stock has formed a base around 885 zone, and now the close above 900 is clearly indicating that now stock is breaking out of its consolidation range. So we expect United Sprit to continue further higher in the coming week. We are projecting target of 940. Keep stop loss of 885.
Okay, so those are the top recommendations coming in from Ajay. But before we wrap up the show, Ajay, I just wanted to come to you and know your understanding on the broader end of the markets, because we have seen substantial recovery in the index as well from the March lows. But now, do you believe that given the cautious stance that you are having, is this a good time to book profits out here? And any sector that you wish to highlight either on the buy side or the sell side?
Yeah, the second one is easier too, so I'll answer that first. I think textiles are coming back, Srishti. So for the second half, with the inventory destocking happening in the US, I think textile stocks are looking good for the second half of this year. And come what may, I don't think there is a recession coming in the US. It would be a soft landing. So far, the leading indicators are pointing towards that. So I think textiles should see a recovery. In terms of booking profits, it's a very tough one, but I would take money off the table. I think it's going to be a sideways market. 3 times the market tried on the Nifty to break through its all-time highs, and it found pressure there. That's for the technical guys who understand it to say it better. But my limited reading is that the market is finding it tough. The small cap, mid caps have done very well, and that normally happens when the economy is doing very well. You see the small and mid caps doing well, but quality and non-quality both are running up. So you get afraid of some amount of interested buying happening and stocks being taken up. So I always mention that the small caps are better played by the mutual fund route. Because those guys will then buy 40, 50 stocks and keep for you rather than pursuing that 1,000 bagger yourself and losing all your capital. So I would say book profits in small and mid caps. It's very topish. Quality players you can hold. That's not an issue. Those will continue to do well. And overall, I'm seeing a sideways market.
Okay. So that's the take coming in. And textile is the space that Ajay is looking forward to. But with this, we let you go on that, gentlemen. Thank you so much for joining us today on ET Now and helping with your take and the outlook on the Indian markets ahead. Have a happy weekend.